Now, we're going to talk about SMT, Smart Money Tool or Smart Money Technique. When we are down below these relative equal lows on British pound, we're expecting price to accumulate those sell stops. But how do we know that that's really going on? How can we trust that? Well, bring in the dollar. The Dixie, DXY, is being overlaid on the pound dollar chart. And on TradingView, you can see that the dollar index went a little bit higher than this short-term high there. At the same time, pound dollar was unable to go lower than its previous low. Now think, if the dollar is going higher, pound should be going lower. But if pound is going higher, dollar should be going lower, vice versa. But if you look for times when there should be a key level influencing price, this is when you go to SMT. Now, I taught SMT on baby pips like 10 years ago, and everybody took that and ran with it and tried to make SMT occur on all time frames. Every time they wanted to get a trade, they're looking for it. You only consider using SMT, which is a divergence between correlated or inversely correlated markets. If you're looking at the dollar index against the pound, or if you're looking at the dollar index versus the euro, or the dollar index versus the Australian, okay, that's a USDX SMT divergence, or dollar SMT. If you're looking at correlated pairs that are like euro and cable, or like, let's say it this way, euro dollar comparing its lows to pound dollar, that is a correlated pair SMT divergence if you see them break their correlation. In other words, this is a breaking correlation. This high with a higher high on dollar should have been seen with a low and a lower low on cable. But notice what's happening. This right here is how the algorithm tips off the traders that are in the know. We already know going below those relative equal lows that their sell stops down there and it's probably going to go down there, accumulate, and go higher. That's likely. But how do we really know and trust that's going to happen? The dollar index gives us the insight, the x-ray view, if you will, where it went high, higher high, low, failed, lower low. So it's telling the traders without really broadcasting it that, okay, cable's going to start going higher because it failed to make that lower low where the dollar made the higher high. So this is SMT divergence. Higher high, higher low. This is occurring at the same time we're below those daily equal lows, and we're expecting price to go higher anyway, and all this does is confirm. SMT is not a timing tool, it's a confirmation tool. Okay, it confirms something that you were already expecting anyway. And this is why a lot of folks that learned from me on baby pips thought that, oh, SMT doesn't work. It doesn't work because I tried to look for it here and there, and it failed here, it failed there. You don't go into your charts looking for divergence between highs and lows. That's not what you're doing. You have to have logic and some measure of a narrative behind what it is that you're looking for. Otherwise, the divergence could be there momentarily and then completely evaporate. And then what did you trade on? You traded on the basis of like an indicator. And this is not an indicator when it's done correctly, because I'm comparing the price of one benchmark currency, the dollar, versus another currency pair, and they should be mirroring one another. Okay? So if this is higher high, this should be lower low. If it doesn't do that, that to me indicates as a crack in correlation. Therefore, it's tipping off algorithmically. This is the signal that it sends. It's not, oh, it went down and there was not enough sellers to send it lower. That's not what that is. It also isn't a low and there's too many buyers to let it go down. It's not that either. I'm telling you what it is. I'm telling you exactly what it is. And majority of you aren't going to agree with it because you know, you probably read 14 books, okay, or watched a couple videos on somebody else's YouTube channel, and they swear up and down that it's this and it's that, and they maybe have exotic cars that they're leasing, and they're trying to convince you with stacks of money they're carrying around with them all the time and going on trips. Go into a chart, okay, and use these things I'm teaching you, okay, and study like that. And you'll learn far more than any book out there is going to give you. Because most of the books that's being written now are just bleeding information from what I'm giving you here on this YouTube channel or from my mentorship. And that's the truth. And if it sounds arrogant, I'm sorry if it sounds arrogant. I'm not trying to be arrogant. I'm just telling you, if you're going to learn how to do this, you need to learn it from the source. And that's me. I'm going to show you how to use this stuff and make money with it. Real money, not demo dollars that I teach for compliance reasons, because I'm not licensed to give you trade advice. But I promise you this, if you learn this stuff and you get good with a demo account, what separates the ability for you to do the same thing in a demo account and a live account?